Okay, welcome to a capital hungry breakdown of GBP USD. So it's been a while since we've done a breakdown on this pair. I think it's been at least a couple weeks, maybe a month. When we map the key levels and all that stuff, everything will be fairly similar or like just off by a few pips or like 10, 20 pips or whatever it may be. But I still want to do a full analysis and breakdown on this pair from the higher time frames down to the lower time frames. We're going to start with the yearly chart and really look at it from a macro perspective and some of the price action and what we see developing in front of us alongside with some of the macro fundamentals going on in the market impacting the higher time frames. And then we'll zoom in the time frames, of course, and look at micro points that are impacting day to day as well. But I just want to start creating some potential trade ideas here on GBP USD. So first thing I want to note, of course, is that we have hit historical low points where we didn't even have price data on the TradingView or Oanda feed anyways, right? We hit historical low points due to the coronavirus, of course, sweeping the markets, causing mass fear, inflating the price of the US dollar as the world reserve currency in the safe haven, and heavily deflating the value of all risk currencies across the board. If you look at any pair against the US dollar, such as EU, AUD, USD, GBP, USD, during this time of extreme economic negativity and volatility, we had the same type of move where those pairs were hitting historical low points, right? What we want to note is that technically, unless we are going in a one-directional path and we have extreme bullish momentum or extreme sellers momentum, most of the time on higher time frame candles, a significant wick is formed. But because we had such downside pressure to start the year right off the bat, I know a lot of us forgot, but we almost had World War III too with the Iran stuff that was going on. And that general being killed and potential attacks going back and forth. Then we had the coronavirus stuff. We still had a lot of negativity, political, related to trade politics, right? The trade deals between countries and other things of that nature. So 2020 just started heavily on the fear side of the sentiment scale, right? What I want to note now is we are having mass optimism. We've had heavy liquidity grab from these historical lows. Remember, sell high, buy low, just from a normal concept, right? We are noticing that one thing I want to notice when we go down the time frames as well is what we haven't looked at is the higher time frames on the US dollar. We've really looked at the daily and the intraday. We have not looked at like the quarterly or the monthly chart on the US dollar. And simply just looking now, you can see how bearish it really looks, how we have this very strong order block and seller sensitivity area and liquidity grabbed at previous high points and fails to break above those highs. We're having very strong market optimism, and it looks like the US dollar overall on a more zoomed out scale in the higher time frames has potential to melt down all the way to 88 flat. And especially if it breaks this minor support, you're seeing that it's pretty much approaching right now, right? You can see this quarterly candle period still has 72 days in it. It's already made a fairly decent top wick as the previous candle closed bearish. And just there's overall a lot of sellers pressure on the US dollar, and especially if market optimism continues to run strong. We notice equities are strong, more headlines around coronavirus vaccine, lockdown easing, global data is starting to rebound, continued stimulus and support from central banks around the world, specifically for the Feds and the Bank of England, where of course if the Feds and Bank of England talk about the US strength respectively, and of course the UK strength respectively, it does bring overall market optimism, which will deflate the value of the US dollar even further. And once it breaks through this minor zone here, pretty much around 95.3, it has a pretty clear meltdown to at least test these previous candle bodies at 89. And that drop is fairly significant to signal a lot of market optimism. On the inverse of that, we would see something like GU potentially flip and test some of these candle body areas here to at least create a more significant upper wick, okay? Like a top wick for this yearly candle. We'll of course zoom down the time frames to the quarterly and the monthly chart, but just this range from, let's just say current, of course we're looking at a yearly chart, so it might not seem like much, but just this range to create a potential top wick and come up to test these candle bodies is almost 900 to 1,000 pips, right? So now with how we are seeing UK data specifically rebounding, we're having more positive trade talks between the UK and the European Union, as well as the UK and US. We have the Secretary of State from the US going to go visit Boris Johnson. Boris Johnson has had tons of optimistic speeches, as well as overall support for the UK and in its current climate of trying to promote more lockdown easing. And we haven't had any confirms of continued mass fear yet. And optimism just has been looking overall strong. And even like the dollar, when we were looking at it during the market update, still fairly bearish, right? So now, before we start zooming in the time frames, as I do see the potential just for us to at least create a top wick, of course, if we have long-term optimism and signs of economic actual rebound, like through that economic phase, then we're going to continue up and correct more of this downside move and sort of repeat something that happened here, right? Where we can grab a bit more liquidity before we possibly continue down again if there's any negativity in the markets 2 or 3 years from now. But that's just projecting, and that potential from a long-term perspective is like thousands of pips, right? But and just that's how you see this pair sort of then drop, grab some liquidity, drop, grab some liquidity, drop. But that's long term. Just looking at price. Because we had minimal price sensitivity data here, I'm of course going to use the low wick points as areas of sensitivity as well, especially as these are yearly wicks. So it's like over 365 days worth of price data. Of course, the candle body closures is always the main. So I'm just going to start mapping out key levels, and then we'll zoom down the time frames. We'll look at how price has played out through these key levels as well, or not played out through them. Now, the previous quarterly candle closed as a bit of an indecision, but it did partially wick fill and grab some more order flow, buyer order flow from the downside. This candle does have a lower wick created, the quarterly candle, and it is respecting the support from what we saw marked on the yearly, right? This was a yearly support level at 1.2338. So pretty much I want to start zooming in the time frames and look for retest points and continuations up. Of course, if we break above 1.27443, there's a ton of room for upside into these ranges, but I'm just going to start marking off some other levels using these candle body conjunction points, and then we'll just zoom in the time frames and continue looking at what's going on. I'm just marking whatever I see closest to me, even though we might not go there for years. It doesn't hurt. So you can see heavy liquidity grab to the downside. We are validated and above this previous candle bodies on the left and the support that was created from a historical point in a yearly level. We did have the previous candle close as a bit of indecision, but partially fill some of that wick range. We are having a lot of market optimism coming to the scene. We do have some sense of price sensitivity we would have to break through here to really get that full range up of that 900 pips. If we break above this price sensitivity area here and have long-term optimism confirms. Down here, we'll go to like the weekly and daily as well, so no worries. Of course, I'll round these off and clean them up after when it comes closer to. Actually, we don't have to put zones down here until we'll get closer down there. And if we ever go up here, I'll put more zones up there as well. But we'll just watch how price action played in between these key levels and ranges. I just want to clean up a bit in between here. Of course. So just some ranges and guides for us to work with. Some of these are 50 range. Some of these are 50 pips. The tighter ones are tighter for a reason. Yeah, we'll just see how price played out through these levels. Just for the last 3 months. Yeah, not bad to use as guides and key levels. You can see once I round these off, they're very similar to the previous levels we already had. Daily bodies is a level. Okay, just looking at the weekly as per structure, I do see the potential for us to come up and retest some of this higher time frame market structure, especially as we've had this heavy impulsive correction of the downside move that came above this key low to the left and price sensitivity area here to the left. You can see the pullback that happened after the heavy move where it looked like we were going to have a sell and dip lower, remained above these key price levels and lows to the left. So this can almost be validated as a potential wick with the snapback it had. We're seeing very strong bullish market structure intraday and breaks above previous highs. This weekly candle has already made a significant lower wick, and it looks like once it breaks through these previous candle bodies, it's going to continue up into the 1.288 regions and fully correct more of this downside move and test this price sensitivity area here to the left a bit deeper. Especially if everything stands as per the market sentiment. US dollar continues to be bearish. Yeah, this looks like it's going to melt the US dollar. Looks like it's going to fall off a cliff and correct more of this down upside move. especially with all this liquidity generated, failing to break these high points. The snapback there that went back into bearish structure, breaking this minor bullish structure. It looks like it's going to start to come down and melt to these points, which means more market optimism and of course US dollar weakness, which can support continued GU buys, right? Let me delete that mess. That's good enough for now, as per rounding off those levels. Daily, a bunch of liquidity grabs to the lower side, creating a very strong flat bottom support, potentially breaking above previous high candle. This looks like a nice intraday zone I'm going to mark here. We're using these candle body tops here. And as like a potential retest point for buys for us, if we can get a pullback to this area between our major zones here. Otherwise, we're looking for a break and retest above 1.267, and we're looking to visit these previous highs that were formed from this intraday perspective, where you had this high formed that broke above these highs to the left. This pullback just looks like it was grabbing liquidity as it didn't break previous lows or break bullish market structure on an intraday perspective. And now it looks like we've generated enough liquidity now, especially in this little bit of a period of time, where we have enough juice to correct this downside move. Where if we get that retest, even that's like 200 pips. It's pretty nice. If we break above there, then we're just fully correcting this downside move from the market collapse period. Very similar to GJ, of course, where you had a risk currency versus a safe haven, British pound versus a safe haven, and multiple failures to break predetermined key level and previous intraday lows. It looks like we are breaking this minor bearish structure here on the 1 minute. We're getting very strong bullish structure formed overall. Very similar to GJ right now. You can see where it broke that bullish structure is also where we had a retest. Price created a sensitivity area and order block area in the lower time frames above predetermined key level. Exactly like GJ. Same bias as GJ, except I see the US dollar as weaker than the yen. Right now, we might get a pullback, just talking short term, just because the dollar is getting a bit of a bullish push just at New York Open right now to grab some liquidity. So possibly that can give GJ a pullback as well to test some better GJ and GU to test some better buy areas. Just in this range here, I'm seeing some order blocks and price sensitivity where the previous high was. If we could get this 4 hour is going to close very strong bullish, right above previous high levels as well, potentially in the same area. But if we can get the next 4 hour to pull back and hold structure and make a lower time frame support at this red box around 1.2615, or and make that lower time frame support, all the same types of confirms I always tell you guys. Or if we get a deeper pullback to 1 point to like the key level again, which I doubt because that would be fully correcting this upside move and showing us potential just to range and go back down here. So I would prefer this 4 hour to close above this key level right now in the next 40 minutes. And then the following 4 hour to retest, hold structure, possibly form like a potential bullish flag. And then we can catch that breakout above the key level. This range, this medium-term zone to the key level alone is 57 pips. And then we can play 88 pips if we go up a bit further to 1.27. Safe buys would be a break and retest above 1.267. And very similar to GJ, where I wouldn't take any sells without confirms of market fear and price back below 1.25100 here, where you know how GJ failed to break 134.200 multiple times. GU did the same exact thing, but on a predetermined key level at 1.251. If I put these side by side right now, probably can't tell the difference. Feel me? Feel me? You feel me now. All right. Any questions about GU? Any questions about GU, guys? Only safe sells below 1.25100. Safer buys would be a break and retest above these previous highs and price sensitivity area and our predetermined key level at 1.267. And I would not mind a pullback to this medium-term zone and to correct some of this upside move, grab some more liquidity, and then continue up. Yes, sir. 1.3, 1.13. Oh, yes, sir. MK. Perfect. Yeah, pretty much same area here. 2655, 267, like 15 pips apart, right? Same. If we could break above there, yes, sir. Okay. Of course, we have some U.S. jobless claims data. We have the UK retail sales, which in my opinion should be stronger. Boris Johnson speaking right now. What's this guy saying? See, he continues talking about more optimism. They want to engage constructively with the EU on key issues on future relationship. He's been fairly optimistic towards like political issues, coronavirus, UK economic rebound. So I'm going to save this, label it, and send it over. I'll set some price level alerts as well, and we'll jump into another breakdown shortly. What's next on the list I was voted for? GBP CAD? Fuck, man. Who voted for this shit? No, I'm just kidding. All right. We'll do a GBP CAD breakdown next. Update.